gentlemen, we look at 2026 with a lot of hope on the last day of not only December but the current calendar year 2025, which has been very painful for not only long-term investors but short-term traders as well. To gauge what lies ahead and where could fresh money be flowing into on the long side, we are joined by Mr. Deven Choksey, a very well-known market analyst for the last more than 3 decades and the managing director at Jaro Choksey Private Limited. Namaste Deven bhai, a very warm welcome, and in advance the very best for 2026 for everybody at home, your team and yourself. What does the crystal ball tell you for 2026 after a terrible 15-18 months?
Yes, good morning, Shail, and wish you a very, very happy festive season, and then at the same time, a welcoming of New Year in 2026. Yes, I think 2025 has been a challenging one on every front, even when you look back. Best thing that I think we do not, count what we have experienced at this point of time and look at, what we are likely to experience in 2026 in a given situation. 2026 starting with a significantly large amount of promises. On one side, our GDP growth has been the highest in the recent times. It promises to be in the vicinity of around 7.3, 7.5% on a CAGR basis for at least next 3 years. We are experiencing India becoming the fourth largest economy of the world at the start of 2026, so which is a very powerful recognition that we are getting. Never before in the history that this country had experienced the kind of purchasing power this government has placed in the hands of individuals. Tax rates have been brought down. Income tax up to 12 lakhs has been made free. Family of 4 with an income earning capacity of 50 lakhs, I think, are not paying any tax. Never seen before in the history of this country. GST rates have been brought down to 2 rates largely, and I think again bringing up larger amount of money in the hands of people by reducing the rate. Interest rates are down, inflation is down, and India is entering into different kind of free trade agreements with the rest of the world countries. So promises to be, I think, export-driven kind of a drive for industry eventually in subsequent period of time. So these are all some of the very strong points on which India is entering into 2026 under significantly large amount of promise than before. Markets on its own terms, I think, is not expensive, which is excellent proposition. I'm talking about Nifty 50, which remains in the vicinity of around 20 times price earning ratio, and 1 year forward, I think lower than 20 times price earning ratio with a 15% rate of growth. So we believe that I think overall Nifty basket is not expensive. Mid caps, small caps are correcting on the valuation. That's a different issue. So yes, I think from market perspective too, along with the economic perspective, we are entering into 2026 with great amount of promise.
Okay, Devan bhai, that's what the future holds as far as 2026 is concerned, and you rightly pointed out the positives. Now tell us what have been your learnings for 2025. We've seen a sideways to weak trend on the Nifty, just 9% up, barely meeting inflation. Mid cap and small cap indices are in terrible pain. What were your main points that the market taught you for 2025?
Well, I think a few right things and few could have been right things. I think that is what I would like to put it across as. Right things are we did not chase the momentum, we did not chase expensive valuation, and that is something which we did it right. Maybe I think the past experience helped us in doing that particular activity in a very systematic manner. So investors who have invested, I think probably have not ended up losing the capital, even though they may not have earned significantly large amount of return into the markets. On the other side, what could have been done better? I think we are convinced that these valuations in some of the cases in mid caps and small caps are not sustainable. The growth rate assumed in this valuation is a very significantly large mismatch between the reality and the assumption. I think we could not aggressively sell or recommend for selling those ideas, I think, which probably I think would remain at the back of our mind always. Whenever we are convinced that valuations are wrong, in a subsequent period of time, I think the market has validated this conviction. I think we had to play on this conviction, and that probably could be called as a relative amount of shortcoming in our approach in 2025. But I would call it as a learning. It helps, I think, to correct your future in a manner in which I think it is required to be.
Okay, fair point. Now, in terms of mid caps and small caps, do you hold out any hope for investors in this space? Mostly, all large portfolios as well as the retail investors are deeply embedded into the mid cap, small cap space, which has been very painful for 2025. Any hope for them?
Well, I guess I think we will not be painting everything with the same brush. I think many of the mid-cap companies are promising companies. They are having a large amount of growth to talk about, and they are at the same time not very expensively valued. So certainly, I think we'll exclude them from making this particular comment. In general, most of the mid caps and small caps are still valued fairly rich. I think against 15-20% kind of a growth that they are assuming, or in some of the cases, even 20% above rate of growth that they are producing, they are quoting at 60 times, 70 times, 100 times kind of a price earning ratio, even today after the price corrections. So in my viewpoint, I think there is a still room for them to correct on the prices because the growth is not emerging faster as probably envisaged at one point of time by the market players. So from that perspective, I think there is going to be a relative amount of disappointment. From that perspective, some of the impatient investors would move out even of some of the quality names because of the higher valuations and lack of visibility for growth in the prices. So in my viewpoint, I think this is going to be year for mid cap and small cap, or more or less a consolidation year. It is not going to be a momentum year or a runaway boom year for mid cap and small cap as I see it today. Maybe I think we keep on factoring newer developments every time. But at this point of time, we are remaining very selective about, and we have been always selective about the mid cap, small caps. We'll continue to remain so in these particular times. Some of the companies are really looking good from the business point of view. However, valuations, when they permit you to enter into, I think that would be a great time to look at those kind of companies.
Okay, okay. Devan bhai, your research team is gearing up for the quarterly results, which will be now with us in the next 10 days or so. What is your expectation and hope for the IT sector, and broadly, which stocks, which sectors are you hoping will outperform from second quarter earnings?
So fortunately, unlike many of the past years, I think this particular year, the third quarter for IT is likely to be relatively better. 2-3 points. One, of course, I think currency gain is one time affair, agreed. So I'm not counting that in a system mode manner. It may probably add up to about 0.5% rise in the margin, etc. That's a different issue. More importantly, some of the large cap IT companies have ended up shifting their entire activity spectrum to the AI way of working. Their coding business, I think, is now basically becoming more trained on the AI part of it. So they're in a much better position to deliver the output to the end customer. On the other side, their customers are also developing the newer budget for the new year, in which they are going to place larger orders from these large IT companies. So choice is definitely going to be with the front run IT companies like TCS, Infosys kind of companies, where we will not see a very quantum jump in the appreciation in the price. Maybe I think around 15 to 20% appreciation in the price 1 year forward. But more importantly, I think they will have a very strong tailwind in form of, I think, new order intake, in form of, I think, AI way of approaching the entire subject. And at the same time, companies like TCS has also shown a character to move away from pure play coding model to now infrastructure based model in form of, I think, tying up with the data center company. So all in all, good together in my viewpoint, I think it's going to be a shift year for large caps, and we will remain bullish on Infosys, TCS kind of names to begin with.
Okay, fair point. The other issue I wanted to ask your view was on the NBFC space. Earlier in the year, we discussed Bajaj Finance. We've also discussed Shriram Finance in great detail. This space has turned out to be a very decent earner for long-term holders of the stock. Within the NBFC space, what would be the top three picks at Deven Choksey?
Well, I think it's undoubtedly Bajaj Finance remains, I think, in the top pick as itself. Because I think this one company has shown a very different character in form of, I think, growing the business. You can call them as an NBFC company, of course, because I think their main thrust is on lending. But today, I think this company is driving the entire finance through product selling, which means that suppose today you are buying, I say for example, I think an iPhone you are buying, immediately I think the Bajaj Finance is prompting you to buy the loan along with. And they are offering you at a 0% EMI, which is your subvention pricing model. This company is championing this model through the use of AI now in bringing the customer onto their platform, which according to me is serving two purposes. One, I think the product consumption is on a higher side. This company is generating higher amount of NIM because of that. And at the same time, I think their cost of funding is going down largely because of the fact that I think they are in a much better position to collect this money upfront. In fact, I think they give the wallet share, and I think on that they are collecting the payment upfront. So, in my viewpoint, I think the company is advancing very systematically. So, we like Bajaj Finance. Shriram Finance definitely now the fuel is in tank, which means I think the amount of money which they have got it from the contribution of the new partner, I believe that I think is now opening up the gate for them to grow further into the commercial vehicle space in which they are predominantly operating. In my viewpoint, I think they should be expanding along with the infrastructure growth in the country in a systematic manner. If the third company has to be given the preference, it would be Bajaj Housing Finance. We believe that I think housing as a sector is going to grow significantly. Bajaj Housing Finance looks, I think, relatively more stronger compared to other housing finance companies because of the model that they are following in for producing better amount of NIM compared to others.
Okay, okay. I think those are sensible stocks that you've discussed. Within the defense space, Deven bhai, 2025 has been more of a write-off except for the brief flare-up that we saw in these prices during Operation Sindoor. Are you hopeful that 2026 will be better for defense stocks? If yes, what would be the top pick?
Unquestionably, I think defense companies will have higher earnings to talk about in 26-27 financial year. We are very, very clear on this particular understanding that we can. Uh, but that higher earning would be, I think, 15 to 20% kind of a growth. In some cases, it might be slightly higher, but I think otherwise 15 to 20% kind of a growth in general that we are seeing. Now, which means that I think most of the companies in the defense space, if I have to buy, they are probably, I think, quoting 40-50% premium to the earning growth that they are producing or likely to produce in next year as well. In my viewpoint, I think there is a mismatch. On one side, your business is growing at 15-20% earning growth. On the other side, your valuations are already 60, 70, 80, 90 times price earning ratio. I don't think that I think that justifies the investment, and that is where probably I think I would like to be a little bit more uh, careful about any stock into the portfolio. We carefully watch if any price correction, meaningful price correction comes. Yes, I think we'll buy because the visibility of earning remains extremely high due to the government spending in the defense. So we are mindful of this situation.
Okay. And the most stunning sector after metals, Deven bhai, has been the auto space, thanks to the foresight of the government in terms of GST rate cuts, as also lower borrowing costs. Now that we've seen a 6 month time frame of auto stocks along with decent, monthly volumes in terms of actual sales, what would be your top pick in the auto space?
The OEMs continue to do well, and I think no doubt that Mahindra and Mahindra has been the winner of all the lots. They have been, I think, cornering significant large amount of bookings because of their ability to create a differentiated products in the marketplace. One company which is basically giving you the confidence, obviously, by collecting money in advance and I think delivering after 12, 18 months, which is Mahindra and Mahindra. Fortunately, I think this is a model which is growing. Unfortunately, for the investors who wants to buy a fresh, I think the valuations are pricing in every possible level of growth at this point of time. Having said that, price corrections do take place, which we saw even in 25. If the price corrections are meaningful, I think it's a stock which is required to be added into the portfolio for sure. Bajaj Auto would be the next. I guess I think that Bajaj Auto is showing a very different character of growing the business portfolio for electric vehicles, of growing the portfolio for the larger units, that is larger power motorcycles in ICE segment as well, through the Triumph, through Husqvarna, and also through KTM and their own portfolio of Pulsar and Discover. So in my viewpoint, Bajaj Auto, with around 70 plus countries of export focus, would be another one I think which should be very systematically looked at, I think, in the investment portfolio. More than the OEMs, maybe I think my confidence level is also very high on the ancillary companies. Ancillary companies are actually the drivers of this particular opportunity because they are going to have significantly large amount of role play in the current situation and the next. So in my viewpoint, I think the likes of Minda, Minda kind of company, Minda Corp, Minda kind of company, they remain relatively more short bets from the investor from the investment point of view. Maybe any price correction would be a better opportunity to have them in the portfolios.
Okay. My final question to you, Deven Bhai, would be two large cap picks for 2026, two mid cap picks for the next 12 months, and two small cap picks where you think justice still needs to be delivered as far as long term investor returns are concerned.
Maybe I think I have top few names, but I think specifically answering unquestionably, I think it would be Reliance for next 2 years. Reliance, as I see it, I think is expected to probably produce around 60 odd percent kind of return in next 2 years time because of I think the two main events which are along with. One is a geo platform listing, and second, the retail listings possibility in 27. Along with that, I think the renewable business, I think which is also going traction, could possibly show the commercial success in time to come. So in my viewpoint, I guess I think the Reliance is basically showing a very different character. Generally, after a 4 year of lull, I think this company has always produced, I think, the higher amount of return. So that also adds to the conviction power as far as any decision is concerned. In my viewpoint, I think this is one company. Play safe with this company, of course. The second choice, which we could have continued to have rather, I think is Bajaj Finance. It is compounding at the rate of 25%, and that's what we like. So even though the price is appreciated in 25, we would wait for some price correction to happen in this stocks if at all, and that could be a buy opportunity for likes of Bajaj Finance. In the mid cap space, I think which you are specifically asking for, I think we love a few names, of course. One is a Minda Corp, largely because I think we see a good amount of opportunity for them to integrate with the success story of the two-wheeler segment in particular. And along with that, I think it would be Minda, which is I think successfully integrating itself with the four-wheeler segment. So we believe that I think these two companies have relatively better visibility for growth. They may end up giving you not a very multiplier return, but at the same time a decent return, outperformance return, I think of 20 odd percent plus. That is a possibility that we see into these two companies. Some of the smaller companies where we keep our eyes on. One of them is a recently listed company called Jaro Education. We love this company more because I think they are producing a significantly large amount of growth without burning cash and producing profit, dividend paying. We like this kind of a proposition. Smaller company, 1,100 crore kind of a market cap, giving a visibility of 35 to 40% kind of a sustained growth because of the larger play in the education sector. And at the same time, I think higher amount of profits in the dividend distribution ability. So this company could possibly be winner pick, I think, within the small cap, along with companies like Tata Technology. It may not be called as a small cap. It may be probably, I think, in the mid cap category. But still, we like, I think, this company because I think they are an integrated player to some of the large OEMs like BMW. So we love Jaro Education, we love Tata Technology kind of companies.
Okay. Jaro Education is what you said. I didn't catch the fifth one. The last one, of course, is Tata Tech. Let me just check Jaro Education.
They call it Jaro Technologies.
Is it J?
JARO.
Jaro Institute of Technology Management and Research, right?
Correct.
Yes. Okay, it got listed in September at 887 and is now available at 462. Fine. So these are the 5 picks, ladies and gentlemen. 2 large cap, 2 mids and 2 smalls that Deven Bhai finds attractive at current levels for a good bump up in 2026. Please also consult your financial advisor should you want to get into these 6 stocks at current prices or even lower or higher. Deven Bhai, as always, thank you so much. You've held our hand with great faith and great foresight and great convincing power for 2025. We hope to see the same trend in 2026 as well. Thank you, sir.
Thank you, Shai, and wish you all the best, and to all your viewers for happy 2026.
Fine. With that, ladies and gentlemen, I'll be back at 2 p.m. But continue watching Business Survey Television for the best that there is in the market.